What's going on, guys? Welcome back to another video. In this video, I've got another very important AMC update to bring all of you this afternoon. So what we're going to be covering in this update is a brief look at the ending short interest and utilization numbers as reported by Ortex to get a better understanding of where the bare minimum baseline potential short interest is at the current time for AMC. And when we take a look at the utilization, we do need to take a look at the trends on where it has gone over the last week and where I think it could head in the near future, with all of those shares going out on loan and most likely being sold into the market on Friday when we saw that decent sell-off. The second thing, we are going to do a little bit more of the option chain analysis that we like to do to figure out what the key levels are going into the next couple of weeks and where the next monthly options expiration date is right now, that we could see the potential for a very large gamma squeeze. Now, there's something that I want to make clear to you guys before we go any further talking about that options and gamma squeeze situation. One, we didn't necessarily see what we wanted to out of the option chain's effects on AMC this week. But what you have to keep in mind is that there's always outside factors. We saw the Evergrande situation. We are now seeing the debt ceiling situation really start to get broadcasted in the news media. And the overall market sold off a lot this week. If we were to have seen AMC continue to the upside, obviously we would have seen some more delta hedging. And the other thing is that we are always going to see delta hedging on AMC. We just don't necessarily know if it's going to be really noticeable enough to cause a gamma squeeze. So if we were to see a lot of options run in the money and the amount of buying volume that would need to come in would push it up to even a higher level where even more options go in the money, then yes, that would cause that gamma squeeze. But if there's not enough options running into the money enough, then we are not going to see that type of price action. Now, the really important things that I want to go over in this video is one, something new that AMC is doing in its theaters. This is something that a lot of people have been expecting over the last couple of weeks that they were going to actually be releasing, and there hasn't really been a statement that I've seen on this yet. But if you look around on AMC's website, they have essentially confirmed that this is going to be happening, and it's awesome news fundamentally for the company. The last thing is going to be the CITADEL and VIRTU liquidations of their AMC positions. I believe there's a specific reason for why they needed to do this in Q2, and we're going to go over that towards the end of this video. So before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So when we're looking at the chart of AMC over the last month, we'd still see a very significant increase. A month ago, we were trading at the low $30 range, and now we are sitting at $44.20 at the time of the market close. And in the after hours trading period, we dropped to about $43.95. Now, again, the overall market is having an effect on the price action that we are seeing, but we are still up a very significant amount over the last month. So what we need to think about here is that, yes, we have seen a very significant uptick in the price of AMC, and it is only healthy to see a little bit of pullback before that next really big leg up. Now, when we come over to Ortex right here, utilization 88.13, we're continuously seeing a lot of shares go out on loan. We did see that 4.5 million share block yesterday go out on loan. So I would expect to see this utilization number get back above 90% going into the end of next week. Now, we have the estimated short interest at around 18.62%. Now, when we come over to Stonko Tracker over here, we really didn't have that many contracts expiring in the money going into the end of this week. We had that hedging and unhedging process really take effect. And coming down a little bit further, the next time that we really right now, again, have the potential for a significant gamma squeeze is going to be January 2021. Now, that being said, previously, when we were thinking about the difference between September and January, September really wasn't setting up that great. But as we moved closer to this September monthly options expiration date, we saw more people betting on this monthly, more contracts ran in the money, and we did see some of the effects of that delta hedging when we were seeing those price movements to the upside. So we're going to have October, November, and December, and it is entirely possible that we see a lot of contracts start to populate on those option chains, and we have the potential for another significant gamma squeeze. Now, when we come over to this page right here, Catch pro football games on our big screens. Watch every play, pass, and touchdown in stunning detail at AMC theaters each Sunday. Score your seat now. This is unbelievable news. We saw this success that AMC had with showing that initial UFC fight, the McGregor versus Poirier fight. A lot of people went to the theaters, and so much so that they decided to offer more fights in their theaters. Now, I believe that pro football being shown on their screens is going to really set AMC apart, not only in the movie theater industry, but apart from any short thesis that we are going to see. We are continuously seeing that the shorts are coming out and saying, well, AMC's fundamentally overvalued. Nobody really wants to go to the movie theaters, but AMC is continuously giving people a reason to go to the movie theaters. This is great news, and I think this could be a really solid catalyst for AMC going forward, in addition to all of the other things that they are working on at their business at the current time. Now, let's get into this Citadel and VIRTU situation in which they are selling off either a significant portion or their entire position of the AMC shares that they were holding. Now, all of these transactions took place in Q2, so before June 31st. But before we get into that, there's something that I really want to make clear to everybody that I still think a lot of people don't fully understand, and it's this. We are never, ever going to know for sure. We're not going to have 100% certainty on which institutions are short AMC or GameStop and how much they are short on these stocks. The way our reporting standards are set up at the current time, they do not have to report their short positions, and they also do not have to report any short options. So when you click sell to open on any option, they do not have to report that either. So the only way that you would be able to know for sure is if you were able to sit right across from one of these individuals at these institutions and you were able to guarantee that they were giving you an honest answer at what their positions are. Other than that, it is a lot of speculation on who is short. But when we come over here, we can see that Citadel sold 80% of their AMC shares in Q2, but they did still have a position in options. Now, we're going to come back to that, but when we come over to what VIRTU did, VIRTU sold 100% of all of their shares. Now, let's think about what happened in Q2. We saw a very significant run up from $10 a share all the way up to $77 in the pre-market at its high. Now, here is what I think is going on right here and how this is really good for us in the future. So you have to think of what hedge funds do. It's directly in their name. They hedge. Now, if VIRTU or Citadel actually had one of these wildly over-leveraged short positions through one of those really weird, intricate ways that they create these positions, like the synthetic shorts that we have gone over before, it is entirely possible that these shares that they were holding were either being used as collateral or a hedge on their other position. So what we are seeing here is that they no longer have the same amount of shares that they did before, meaning they are not as well hedged as they were for that June run-up as they would be right now. So they basically have a lot of exposure is what I am seeing here. So when we think about what could potentially happen, if we see another very significant run-up, it could put a very significant amount of pressure on these institutions who could potentially have these wildly over-leveraged short positions. So that is something that we are going to have to wait and see for over the next couple of weeks and months while we are waiting for this next big run-up to happen. So that is really going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you want to see more videos like this, make sure you hit that subscribe button. So I hope you guys are having a really great weekend, and I'll see you guys in the next video.